Global Reshuffle Trump takes over Venezuela. An oil war rewriting the 2026 wealth map has begun. If I told you that over this past weekend, the global energy market chessboard was completely upended, would you believe me? This is no longer a fictional plot from a Hollywood movie, but a reality that has just unfolded. President Donald Trump has not only announced the capture of the Venezuelan president, but has also dropped a bombshell sufficient to keep Wall Street and central bankers around the world awake at night. The United States will substantially take over the country. Just hours ago, a black swan event worthy of the history books occurred. President Donald Trump announced the capture of the Venezuelan president and delivered a shockwave. The U.S. will directly take over the country until a so-called transfer of power is complete. This is no simple regime change. It is a naked asset liquidation and geopolitical repricing. Mark this moment. This is not a drill, nor is it a conspiracy theory. This is a forced merger of the world's largest oil reserve holder, Venezuela, by the world's largest economy, the United States. When Trump unreservedly uses words like reimbursement and taking out wealth in his statement, he has effectively sent the clearest signal to global investors. The rules of the game have changed. We stand at the precipice of a colossal shift in 2026. In the eye of this storm, the stakes are not merely political. They concern your wallet, the future of oil prices, the endgame of us, China rivalry, and the survival and opportunities for every ordinary investor like you and me in this turbulent era. The upending of the energy map. Why Venezuela? To understand the financial magnitude of this operation, we must first grasp what Venezuela truly represents. It is not just a South American nation. It is a massive vault buried in the Earth's surface. The cursed black gold in many people's minds, Saudi Arabia is synonymous with oil. But the factual data might shock you. Venezuela is the true king of oil. This country sits on over 300 billion barrels of proven oil reserves, more than Saudi Arabia, and over 4 times the reserves of the United States itself. It is akin to a beggar sitting on a mountain made of solid gold. Yet, over the past 2 decades, this mountain of gold has not brought wealth to the Venezuelan people. Instead, it has become a textbook example of the resource curse. America's commercial calculation, from sanctions to takeover. The reason Trump's statement sends chills down the spines of Wall Street elites while simultaneously exciting them is that he is not just talking politics, he is talking business. He explicitly stated, "We're going to be taking out a tremendous amount of wealth out of the ground," meaning oil. Note his definition of the distribution of this wealth: return to the Venezuelan people to maintain social stability. Return to those expelled oil companies. The return of giants like ExxonMobil and Chevron. Most crucially, return to the United States of America as reimbursement. This is a fundamental shift in U.S. foreign policy. This is no longer simply promoting democracy. This is a modern commercial version of the war reparations logic. The U.S. views Venezuela as a company in bankruptcy restructuring, with the U.S. as the senior creditor with priority claims. This means that every barrel of oil extracted from Venezuela in the future could potentially be tagged as a U.S. asset. To forecast the future, we must retrace the footsteps of history to see how Venezuela went from being the richest in Latin America to the mess it is today, and why the U.S. believes it is time to buy the dip. The 2007 turning point, the cost of nationalization, rewind to the 1990s, the golden age of Venezuela's oil industry. Back then, top U.S. oil companies brought capital, technology, and management expertise to operate in Venezuela's Lake Maracaibo, pushing the country's daily production as high as 3.5 million barrels. However, in 2007, then President Hugo Chavez, waving the banner of nationalism, pushed through radical oil nationalization policies. U.S. giants like ExxonMobil and ConocoPhillips were forcibly expelled and their assets confiscated. Chavez told the cameras, "This is the people's oil." But he ignored a core issue. The oil industry requires not just resources, but maintenance, technological upgrades, and massive capital investment. The collapse of infrastructure with the withdrawal of foreign experts, and the corruption and mismanagement within the state oil company, PDVSA, Venezuela, as oil infrastructure began to fall like dominoes. Pipelines rusted, refineries shut down, and technical talent fled. By 2024 to 2025, this country with the world's largest reserves saw its daily oil production plummet to under 1 million barrels. This was not just an economic recession, it was industrial suicide. Trump's sanctions and positioning during Trump's first term. Around 2017, he imposed extremely harsh sanctions on Venezuela, cutting off its connection to the international financial system. This was not random punishment, but a long siege. The sanctions accelerated the suffocation of Venezuela's oil industry, forcing the country's asset values to rock bottom. And now, with the takeover order issued, the U.S. is prepared to enter at the absolute bottom of asset prices. A new battlefield in U.S.-China rivalry. Kicking out the Eastern buyer. This event is not just a bilateral issue between the U.S. and Venezuela, it is a critical move in the global chess game between the U.S. and China. If you don't see this, you don't understand the geopolitics of 2026. Chinese capital filling the vacuum. When the U.S. imposed comprehensive sanctions on Venezuela in 2017 and Western capital withdrew. Just as nature abhors a vacuum, another superpower filled the void. China. Over the past few years, China became Venezuela's last lifeline. The data doesn't lie. In 2025, China purchased a staggering 80% of Venezuela's oil exports. Through oil for loans, agreements, China injected tens of billions of dollars into Venezuela, attempting to establish a solid energy and geostrategic foothold in Latin America, America's backyard. Trump's killing two birds with one stone. Now, you can understand the deep strategic intent behind Trump's move. A U.S. takeover of Venezuela means directly severing this energy artery for China. This is not just to allow us companies to return to the country, but to physically remove Chinese influence from the Western Hemisphere. For the U.S., secures a supply of cheap, heavy crude, consolidating energy security. For China, losses of massive upfront investments, the loss of a key energy supplier, and a heavy blow to its strategic layout in Latin America. This is an economic war without smoke. As the U.S. and China enter a heated stage of contending for global economic supremacy in 2026, Venezuela is not just an oil field, it is the Tengen center point on the Go board. Market deduction, the gravitational acceleration of oil prices now. Let's return to the question investors care about most. What does this mean for your portfolio? Specifically, the impact on the blood of industry oil prices. A nuclear bomb on the supply side. The basic principle of economics is that supply and demand determine price. The current oil market is in a delicate balance. But if Venezuela's production capacity is unleashed, the world will face a massive supply shock. Trump's plan is clear. Let us oil giants return to Venezuela with state-of-the-art technology to repair those broken pipelines and pumping stations. If ExxonMobil or Chevron takes over, Venezuela's production has the potential to recover from under 1 million barrels now to 3 million barrels or even higher within a few years. This means an additional supply of over 2 million barrels of oil per Dalton Y flooding the global market. Downward pressure on prices. This will be a nightmare for OPEC. A massive influx of extra supply into the market will inevitably exert tremendous downward pressure on oil prices. Trump has always been a believer in low oil prices. For him, low oil prices mean low inflation, which means a victory for American consumers. By controlling Venezuela, he effectively holds a valve that can regulate global oil prices at any time. Short-term, fear premium versus long-term supply dividend. However, markets are never linear. Short-term Monday open in coming weeks. Markets hate uncertainty. Regime change, potential military conflict risks, and social unrest could all lead traders to drive up oil and gold prices out of panic. We might see severe volatility or even momentary spikes. Medium to long-term second half of 2026 and beyond. Once the situation stabilizes and U.S. companies begin substantive operations, the expectation of increased supply will dominate the market, and oil prices could enter a long-term downward channel. You might ask, I don't trade crude oil futures. What does this have to do with me? The answer is, it has everything to do with every second of your life. The invisible inflation transmission chain. Oil is not just fuel in cars. It is the bedrock of logistics costs in the modern economy. Imagine the cup of coffee in your hand, the phone you are scrolling on, the vegetables in your fridge. They all share a common cost: transportation. Agricultural products transported from farms in Mexico or Arizona to wholesale centers require diesel. Goods transported from warehouses to Walmart or Amazon distribution centers require fuel. Plastic packaging, fertilizers, and industrial raw materials all originate from petrochemical products. Trump, economic ledger if Trump succeeds in suppressing global oil prices by controlling Venezuela. This will generate a chain reaction. Transportation costs drop, production costs drop, retail prices of goods drop. This is why this action is seen as a trump card for the U.S. in fighting inflation. If you are an average consumer, you might feel the aftershocks of this geopolitical action in your future gas station bills and supermarket receipts. Investment weather vane, winners and losers of 2026 in the face of such a massive historical turning point. Capital is finding new directions. As investors, we need to identify where the wind is blowing. Potential winners us integrated oil majors, companies like ExxonMobil, ExxonMobil, and Chevron CVX, possessing deep technological reserves and capital strength, are most likely to secure reconstruction contracts in Venezuela. They will gain massive reserve additions. Oilfield services and equipment, Schlumberger, SLB, Halliburton. Venezuela's infrastructure requires a complete overhaul, which will bring hundreds of billions of dollars in engineering orders. Refiners, Venezuela produces heavy crude, and refineries along the U.S. Gulf Coast are designed precisely to process this type of crude. The restoration of supply will boost profit margins for these refineries. Transport, dependent industries, airlines, logistics, FedEx, UPS, and the cruise industry will benefit from long-term low fuel costs. Potential losers high, cost shale producers. If oil prices crash, smaller U.S. domestic shale companies with higher break-even points could face bankruptcy risks. New energy sector short-term. Extremely low fossil fuel prices could weaken the economic momentum for the transition to green energy in the short term, thereby affecting sentiment in solar, wind, and other sectors. Emerging market creditors. Any institution holding debt related to the old Venezuelan regime that is not on the U.S. reimbursement list could face a total loss. After delving into all the money, making opportunities, we must stop and address the elephant in the room, ethics. The impossible triangle of investing in financial circles. People are accustomed to staring at candlestick charts and earnings reports, often ignoring that behind every percentage point rise or fall are living, breathing human beings. This event involves not just the transfer of assets, but a change of power, inevitably accompanied by turmoil, bloodshed, and the suffering of ordinary people. As investors in the complex world of 2026, we need to establish a new decision-making framework. The investment 3D coordinate system, legal sense, is this investment legal? Does it comply with us armed jurisdiction and sanctions regulations? In the new situation in Venezuela, compliance will be the first line of life and death. Financial sense, can it make money? Is the return on investment, ROI, reasonable? This is the essence of business. Moral sense, do you feel at peace earning this money? Does it align with your personal values? A test with no standard answer? I am not your moral judge. Some will view investing in rebuilding Venezuela as a benevolent act helping local people escape poverty and restore electricity. Others might see it as war profiteering and participating in plunder. Both viewpoints have their logic. In this gray world, there is no absolute black and white. But I hope that before you click the buy button, you clearly realize that every cent of yours is shaping a certain future for this world. Do not just be a money-making machine, be a clear-headed thinker. Not just oil, a comprehensive breakout for the macroeconomy in 2026. The Venezuela event is just a microcosm of the macroeconomic upheavals of 2026. When we zoom out, you will find we are in a super transformation period with multiple overlapping factors. The four horsemen of transformation beyond the geopolitical reshuffle, three other forces are simultaneously tearing apart and reshaping our economy. The Fed's monetary policy pivot with changes in inflation expectations, potentially cooling faster due to low oil prices. How will the Fed's money printer and interest rate policy adjust? Trumponomics 2.0, more aggressive trade protectionism, deeper deregulation, and more direct resource acquisition. How will this change the valuation logic of U.S. stocks? The singularity of artificial intelligence. AI is no longer a concept. It is substantively changing productivity. Energy, electricity will become the biggest bottleneck for AI development. And Venezuela's energy could provide the underlying support for this growth in computing power. All these factors interwoven constitute an extremely complex 2026, filled with limitless opportunities. Facing such drastic changes, going it alone is dangerous. Information asymmetry is wealth, and a lag in cognition is a precursor to bankruptcy. If you are shocked by the content above, if you want to know how to not only preserve wealth but achieve class ascension in 2026 amidst Trump's takeover of Venezuela intensifying us, China rivalry, and AI reshaping industries, then you cannot miss the opportunity that follows. So, if your intuition tells you that subscribing to me could change your investment destiny in 2026, do not hesitate. The subscription button is just below. Click it now. This could be the lowest cost, highest return decision you make this year. Monday's sun will rise as usual, but the horizon of the financial market has changed. Venezuela's oil wells may soon roar again, and Wall Street traders are working overtime to revise their models. This world is fracturing and reorganizing. Old orders are collapsing, and new giants are rising. Trump has captured Maduro. The U.S. has captured the oil, and you need to capture the trend. The world is undergoing drastic changes. The U.S. takeover of Venezuela is just the first domino. Geopolitical tensions are spreading from South America to East Asia, from the Middle East to Eastern Europe. In this era full of uncertainty, protecting your wealth is your responsibility in a tough battle. Don't be the person picking up seashells on the beach when the tsunami arrives. Put on your life jacket and build your ark. We are facing a wild, brutal, yet incredibly profitable 2026. I will continue to track every detail of this oil war for you. Don't forget to click subscribe and turn on the notification bell so you won't miss any critical market updates.